Hey friends, welcome to today's Singapore Market Digest. I'm Wei from the Investing Iguana, and today we're diving into some key movements in the Singapore market. We'll be looking at Capitaland Integrated Commercial Trust, CICT, Keppel Corporation, Frasers Logistics and Commercial Trust, FLCT, and Sabana REIT. Let's get started. CICT is one of Singapore's largest real estate investment trusts, REITs, managing a diversified portfolio of retail, office, and integrated developments. Its properties include iconic locations like Ion Orchard and Raffles City. As of yesterday, CICT's share price closed flat at $1.93. The trust announced a distribution per unit DPU of 0.0545 for the second half of 2024, unchanged from the same period last year. For the full year, its DPU totaled $0.1088, slightly below market expectations, but supported by a 6.4% year-on-year increase in distributable income to $385.7 million. CICT has been actively enhancing its portfolio value through asset enhancement initiatives, AEIs, and acquisitions, such as its recent 50% stake in Ion Orchard. Despite challenges like rising interest rates, its high occupancy rate and strategic location of properties keep it resilient. On the technical front, CICT's support level is at $1.93, with resistance around $1.95. It sits trading near its lower range, which could present a buying opportunity for long-term investors. In the broader REIT sector, CICT competes with peers like Capitaland Ascendas REIT and Mapletree Commercial Trust. While sentiment towards REITs has been dampened by high interest rates, CICT's strong sponsor backing and strategic positioning make it a stable choice. Keppel Corporation is a global asset manager with businesses spanning infrastructure, real estate, connectivity, and asset management. Keppel's stock closed at $6.63, down 1.6% or 0.11 yesterday. For the second half of 2024, it posted a profit of $528 million, up nearly 20% year-on-year, driven by growth in its connectivity segment, particularly data centers. Full-year profit from continuing operations stood at $832 million, slightly lower than last year due to legacy offshore and marine assets. Keppel's transformation into an asset-light model has allowed it to focus on recurring income streams from areas like data centers and subsea cable systems. Its Bifrost cable system project is expected to generate attractive returns upon completion in late 2025. Technically, Keppel is trading below its 52-week high of $7.45 but remains supported by strong fundamentals in its infrastructure and connectivity segments. In comparison to other conglomerates like Sembcorp Industries, Keppel's pivot towards digital infrastructure positions it well amidst trends like AI adoption and decarbonization. FLCT specializes in logistics and commercial properties across 5 developed markets, including Australia and Germany. Its portfolio includes 114 properties valued at approximately $6.8 billion. The stock closed flat at $0.88 yesterday after announcing it leased out 175,000 square meters of space in Q1 FY 2025, achieving a portfolio occupancy rate of 94.3%. Despite macroeconomic challenges such as rising interest rates and higher financing costs, FLCT maintains a robust logistics portfolio with stable rental income. Recent acquisitions have further diversified its assets geographically. From a technical perspective, FLCT faces resistance at $0.90 with support around $0.85, making it attractive for yield-focused investors given its dividend yield exceeding 7%. Within the REIT space, FLCT competes with Mapletree Logistics Trust, but differentiates itself through its strong exposure to logistics assets, a sector poised for growth due to e-commerce demand. Sabana REIT focuses on industrial properties in Singapore with a portfolio worth over $1 billion across 18 properties. Its units closed higher by 1.4% at 0.36 yesterday, following news that its internalization committee plans to vote against resolutions proposed for an extraordinary general meeting, EGM. This move reflects ongoing governance reforms aimed at improving unitholder value. For FY 2024, Sabana reported record gross revenue of $113 million, up 1.3%, driven by positive rental reversions across its portfolio. Its DPU grew by an impressive 32% year-on-year for H2 22-24 to $0.0152 per unit. Technically, Sabana trades near its support level of Sanjaro35 with upside potential if governance reforms succeed in boosting investor confidence. In the industrial REIT space, Sabana faces competition from AIM's APAC REIT but stands out due to its focus on sustainability initiatives like solar panel installations across properties. That wraps up today's Singapore Market Digest. From CICT's steady distributions to Keppel's data-driven growth strategy and FLCT's robust logistics portfolio to Sabana's governance reforms, there's plenty happening in the market right now. As always, remember to do your own research before making any investment decisions. I'll see you tomorrow for more updates on the Singapore market.